Yeah. Did we not have the, of course. It's gone live without the 30-second countdown, Tom. Hey guys, welcome to today's session. I am slightly lagging out. I'm not sure if it's my internet or if it's Blayn's internet, but if you can hear me okay, just drop a comment in the YouTube or X comments, whatever platform you're watching this on now. I'm just going to share the link to this video also. I couldn't quite do it because I kept lagging off for some reason. Where are we? Live with Blayn. Live with Big Boy Blayn for today's Darwinex TV session. We'll go market overview and strategy building. Yeah. Boom. There we go. Okay. Discord link pinged out. Now let's go to X because it looks like has X posted it? Yes. Bang.
Posted it this time.
There we go. Yeah, it seems to have done it. Maybe they fixed it.
Hopefully.
Interesting.
Did you have to manually post it?
Let me get my bearings. I manually posted it yesterday. I didn't have to today. It seems to have done it for me today. However, it doesn't look like many people are coming on. 2 people on Darwinex 0, 1 on Darwinex. So I'm not sure. I'm not sure if the links haven't gone out right. Oh well, it is what it is. Welcome anyway, guys. Today we're going to do kind of a split 2-part session. We'll go over a market overview, and then Blayn will, as per usual, go over some strategy building and development stuff, following on from yesterday's session. If you didn't watch yesterday's session, I highly recommend going back and watching it. In fact, we have, how many weeks have we been doing it now, Blayn? Like 3 or 4? 3 weeks?
Yeah. 3 or 4 weeks, something like that.
Yeah. Yeah, 3 or 4 weeks sounds about right. Essentially what we've been doing is we put together a charity Darwin with the idea of Blayn and I building strategies live on these sessions, getting you guys involved, helping you understand how we process or how we build systems, how we process information, how we put them live, with the sole purpose of building a charity Darwin that is designed to raise money for charity. I also noticed my camera is way too wonky, so if I'm off center, I apologize. We currently have, how many strategies do we have set, Blayn?
So you've got the 4, I believe.
I've got 8.
You got 8 now. All right, okay. And I think I've got 5 at the moment, 4 or 5. So okay, we're at 13 strategies at the moment, slightly down, but that's okay.
I mean, to be fair, it's like February's been a bit of a write-off for most algo traders. I've found. Oh my life, Polkadot 23% today. Wow, unreal. So if you haven't seen, crypto's having a little bit of a bounce today, a little bit of a pullback. I mean, the problem is 23% on current price is still fractional compared to where something like Polkadot has been. You see Polkadot's, that's not the highs. No way. .USD. Maybe get a Coinbase feed. No, it had it then. It must be my internet. Big Owl, Wagwan J, how we doing? Here we go. Now we're talking. All-time high of Polkadot was $55, and it's currently trading at a price of 1525. So even a 23-24% rally at that price is just, if you were buying Polkadot at $10, 15, 20, 30, like, you're basically seeing a penny in your portfolio today, or a penny in your pocket, I should say. Yeah, I'm all good, dude. Thank you. Hope you are too. Yeah, so crypto's having a little bit of a pullback today. Nothing crazy in the grand scheme of things. And to be honest, with the way the price has been recently, I'm not surprised. You remember we've been talking about these on these market review sessions for some time. I highlighted this area back in January. I keep saying to Blayn, but I'm gonna keep saying it until Bitcoin stops falling. On this day, I did a market review session because it's a Wednesday. And I said I'd be looking to short here off of this level, and ever since then it's just been absolutely caking it. I find it interesting that it hasn't broke this low before it's bouncing. But yeah, where it goes from here, I don't really care. This is kind of my load up zone 1, and then load up zone 2. If it falls below 32k, who knows what I'll do. I think if it gets down there, it'll be pretty crazy, because the further down it goes, the more exposed certain players are, like strategy, for example. Of course, Michael Saylor famously says he'll roll forward and refinance his debt on his Bitcoin holdings, but how much you can roll forward and refinance your debt, ultimately there's going to come a time where no more lenders and no more banks are going to come in and give you any more capital. And I think when let's say Bitcoin falls to a price where there is a default on that debt and a default on those loans, that will create some form of death spiral. And I hope it's not, but it could be the end to crypto as we know it. It's kind of worst case scenario. I pray that doesn't happen, but I guess that's kind of the risks of when somebody goes 2 balls deep an asset, right? Michael Saylor's known for doing this. He did it in the past in the .com bubble, and he lost everything and went bankrupt then. And so there's no rule that says someone's going to come and bail him out this time. Just moving my desk down, so bear with me. Taking a look at ETH, up 10% for the day as well. Yeah, unfortunate, because I would love to get a $1,400 ETH. If we can run that low pre-2025 rally, that would be really, or mid-2025 rally, I guess, that would be really nice. Again, this is kind of my area where I'm like heavily getting involved, in between $832 and $1,400. That's a really nice area for me. Again, none of this is financial advice. Please do your own due diligence and your own research. Everything in these sessions is for educational purposes only, but that is the area where, I mean, I'm already buying Ethereum purely based on the fact we are down roughly 60% from all-time highs. So I'm happy to get involved here, but if we move further down to $1,300, $1,200, $1,000 Ethereum, I'll be loading up heavily. At that point, the risk of like, I sort of think if crypto falls like 80 or 90%, the risk for me of like losing it all, I mean, I've lost it all before in crypto, so I'm kind of numb to it these days, but it's less worrisome than if you're buying at all-time highs, because you have to endure this whole free fall. Whereas I think when it gets to a certain point, like let's say Ethereum runs this level at 832, the next stop is basically 0, right? And if it goes to 0, well, you took a punt on what would be a generational trade. However, buying Ethereum at $3,000, $4,000, $5,000 for that matter is not a generational trade. So that's the way that I see it. Again, do your own research, do your own due diligence. But I think these charts are starting to shape up really, really nicely now. There is a narrative right now that Vitalik Buterin, the founder of Ethereum, is dumping his tokens to fund other projects. And whilst that's probably, I think it is true. If we take a look at the on-chain data for Ethereum, it still looks solid. Yeah, my internet, I do not know what is wrong today, so I apologize for the how long my things are taking to load. So this is a platform called DeFi Llama, which pulls all data off chain. So we can take a look at the total value locked. So it's TVL, total value locked in Ethereum DeFi protocols is $53.8 billion. So a hell of a lot. There is a chart that should be loading here, but again, it doesn't seem like it wants to play ball. Let's add some more metrics. So stablecoins market We want to add. We also want to add active addresses, transactions. Oh, it's not even adding them. What could possibly be taking up all this, all my internet? There's literally nothing. Let me close down a couple of things I've opened. Let's close down the server.
It's like a Uno reverse for the first time. It's normally mine.
Yes, exit. Oh, you can give it a rest and all. Maybe it's the amount of tabs that I've got open.
Don't know, like.
Yeah.
Get up here now. Up there. Up there. On your bed. Calm yourself. There's people walking outside. It happens.
This definitely won't load in. I don't know why. Anyway, my point is, I've just gone straight back downstairs. Got a sausage. There's me looking at Guy. My point is, if we take a look at any important metrics on the Ethereum blockchain, if we take a look at how many addresses are active, how many daily transactions there are, the market cap of all stablecoins, which generally reflects when users are keeping stablecoins on chain, and a stablecoin, for anybody who doesn't understand what one is just a token that is pegged to the US dollar. When users are keeping stablecoins on chain, generally it means that they're looking to bid at some point. Again, that's kind of like a general rule of thumb. That doesn't mean it's hard fact. All of these metrics are increasing, same as TVL. And I think Ethereum currently holds about 55-60% of all DeFi TVL. So it's still the largest DeFi platform. So the fact that Vitalik is dumping his tokens is kind of like, if you compared it to something like, I don't know, the CEO of Nike selling all his shares. You wouldn't stop buying Nike clothes just because the owner's selling out his shares. Like, it happens. It is what it is. It's just short term for the token price. It may hurt. Like, it might keep the sell side pressure on. How are we doing, Rob? Hope you're all good, my friend. Anyway, moving on from crypto. Metals looking solid on the day. If my charts ever load. Gold nearing all-time highs again. Interesting. Oh, that was just me mapping out a breakout trade earlier. Interesting that we've just fully V-reversed that nasty move down. I mean, peak to trough, that's a 21% drop. And interestingly, we just V-reversed it and, you know, climbing our way back to the top. It'll be interesting to see if we get back to all-time highs. I think with the pressures that with the pressures that we're seeing between, or the tensions, I should say, between the US and Iran, I think if something happens to kick off over there, which apparently seems highly likely at the moment, then we could probably just see gold and silver again, just green dildoing straight past all-time highs into price discovery yet again. Let's hope that doesn't happen. You know, global peace for everybody, but as we know, that's not the way of the world. And metals generally are a safe haven in times of crisis and in times of war. Silver looks a little bit pressured still, trading at 90 currently. All-time highs at 121. So there's still, how far is that? Still got a 35% increase, you know, to get back to all-time highs. That is wild. Almost a 50% drop from all-time highs in 8 days. I mean, come on, for an asset of the size of silver, that is bonkers, man.
Its daily moves are
I mean, I don't think I've ever seen anything like silver on the weekly. Like, that's just insane, man. What a double top as well. Back in 1980, and then double topped in 2011. And I mean, just look at this just violent, like, that is just, I don't think we've ever seen anything like this, and I don't think we'll ever see anything like this again in traditional markets. Yes, of course, when we're looking at a liquid meme coins and stuff, of course, it's going to happen. But I guess that's kind of how it felt back in the 80s as well.
It's probably the same percentage.
Yeah. So that was a 500% increase in a 168-day period. 500, 168.
Be interested if we get the exact
and
same
then
the price action from back then, and it just completely drops down
so
slightly.
it's actually about half, Blayn. So this is 235% increase in 182 days, and the other one was 500 in 162 days. So even though it looks violent, it actually wasn't as bad as the 80s. But then they also didn't have candlestick charts back in the 80s as easily accessible as us, where they could see the green dildos constantly day after day. So yeah, I think with metals, I mean, I don't really have much exposure at the moment. I've been trading gold again the past couple of weeks. I haven't really seen much action. I think I'm presuming because we're kind of in between this high up here and this low down here. So I think I need a few more weeks before I start to see any of my breakout strategies kind of becoming active on gold. You take a look at indices. SP 500 almost back at all-time highs. Again, just an incredible looking chart. I think it's always fascinating to think, right? Like if we go, if we take a look on the weekly. So as of 2 weeks ago, right, you could technically say like anybody who's ever bought the S&P and not sold is in profit. Like it's just wild that that's the market. It just goes up and up and up and up and up year on year. I'm really trying to personally pivot a lot of cash into equities over the next few years, and every time we see something like this, it's just an absolute godsend. If we start getting 20% dips, like just an absolute godsend. What was this? 2021, 27, and I think what's interesting about the S&P is the dips are so predictable. Like if we take a look at all of the S&P dips, and this is on the weekly time frame, remember, they're not predictable beforehand, but afterwards they are. They all look very, very similar, right? It's kind of like a martingale EA. That's how it looks. It's always slow grind. Oh, wrong thing. It's always a slow grind up, harsh drop. Slow grind up, harsh drop. Slow grind up. A little bit extended, but harsh drop, same again. So it's like, even though it's super predictable, a lot of people struggle to follow that because it's very easy to retrospectively say, well, yeah, of course you should have bought the big fat red candles. But at the time, you know what it's like. You see these big red candles and then, Jim Cramer jumps on and he says the S&P is going to zero. Everyone panics, and then all of a sudden it does an absolute U-turn and goes on straight back to all-time highs. I think it's David Bell says, "Don't ever bet against the US stock market." And the more I see it over the years, the more I genuinely believe that. If the S&P goes to zero, technically, again, not financial advice. If the S&P goes to zero, you've got bigger things to worry about than losing a few $100s or a couple of grand. I think generally, if the S&P went to zero, Google, Apple, Meta, Tesla, or Nvidia, all of these companies are blown up and basically don't exist anymore. Now think about that, a world without any of those companies. Interesting thought. Will it happen? Probably not. Unless the US attack Iran and Iran retaliate and just obliterate the US, which again is unlikely to happen. On FX, I'm not even sure. I haven't even got FX on my watch list anymore. Dollar yen actually breaking out this week. It's been a decent week this week after a few weeks of chop. I've actually, thank God, made some money this week after an awful February. I think Blayn can attest to this as well. After an awful February, the past week has kind of been a little bit of a godsend. It feels nice to actually get some volatility back. I think I've been long dollar yen on this move and this move, whereas I was probably long 400 times in this area. I just kept getting chopped up. Jenny Zule, welcome to the session. Guys, how to reduce my value at risk? My Darwin was created Monday, but my VAR is 44% and my multiplier is 0.09x. Okay, so first point on that is, well, congratulations for creating your Darwin. Absolutely massive. Great step forward for you. Your VAR is 44%. Okay, so you take quite a large exposure when you trade. Okay, which is fine. Now, the key point here is that your risk multiplier and your value at risk act as kind of a self-balancing mechanism. If you increase the one, you decrease the other. If you increase the other, you decrease the one. So even if you decrease your value at risk to increase your risk multiplier, your Darwin will still come out at the same result anyway, because your Darwin is designed to run at its optimal risk level of 6.5% value at risk. Now, if you're operating at 44%, then yes, you will be scaled down. If you start bringing down your value at risk, your risk multiplier will increase, but your Darwin will still be coming out at the same result. So it's kind of like, and I always say this, don't get caught chasing your tail trying to get a better risk multiplier, because your Darwin result generally won't change. The only thing I will say, and this is something that's super, super important, Darwinex has been around for 13 years, maybe 14 this year, because we're in 2026 now, I keep forgetting. And what we've seen historically is any trader that has a VAR of over 30% has an exponentially higher chance of blowing up their account or going on a massive, massive drawdown. And when I say a massive drawdown, I don't mean like a 10% drawdown that is recoverable. I mean like a 70 or 80% drawdown that most traders just give up on, because if you go into like an 80% drawdown, you need like a 500% return just to get back to break even. So I wouldn't be too concerned about trying to increase your risk multiplier, because it's a bit of a dead end task, because the end result will stay the same. However, you are over the 30% value at risk kind of threshold or safety net that we kind of talk about. And that's not to say that you will go on an 80% drawdown or you will blow up your account, but the chance of you doing that, as opposed to somebody who operates at like 10 or 15% value at risk, is exponentially higher. It's like the curve looks like this. Let's say we have 10% value at risk, 20%, 30%, 40, 60, and so on. Okay, so that's our bottom axis. And then we have on the left-hand side, percentage, what am I doing? Percentage to blow up. Okay. So the percentage chance is very slow and linear, very low chance. As we surpass 30, that curve starts to really arc and starts to look something like that. Okay, so it's not me saying that if you're below 30% value at risk that you absolutely won't blow up your account or just keep losing. And it's not to say also that if you operate over 30% value at risk that you absolutely will. It's just the chance of you doing so is incredibly high compared to somebody with a lower value at risk. So if you still want to amend your VAR, I would suggest doing it slowly. So take kind of a 3 to 6 month period where you slowly reduce your size. So I don't know whether you're trading with futures contracts or CFD lots, but let's say you're trading with 10 futures contracts. Over the next few weeks, begin to reduce that. Go from 10 contracts to 9 contracts, or 10 lots to 9.5 lots if you're trading CFDs. Slowly bring it down, and you'll see that your VAR, because it's an average, your VAR takes your previous 45 days and previous 6 months trading history to create your average. That average will begin to decrease, and your risk multiplier will begin to increase. Again, your Darwin will be coming out the same results anyway, so it's kind of a dead end task. But if you still want to, because I know even though I ramble on about that so much, people still want to amend their VAR. That is the best way to do it. Don't do it in one go, because it'll take a while for the average to catch up. Again, let me do. I know it's not the best diagram, but let's say let's say this is your value at risk chart, okay, and you're trading at 44% value at risk, and then here you drop your size from 20 contracts down to 5 contracts. So your real value at risk goes like this. Your actualized value at risk will take a long time to catch up. Okay, so there's going to be a bit of a lag between, which can really dramatically affect your performance in 2 ways. It can keep you risking higher than you actually are, therefore your losses are amplified, or it can stop you from making as much on positive trades, because whilst on your signal account, you know, you might have taken a big winner. If your value at risk has increased, I mean, it's the opposite to you, then your gains on your Darwin won't be as large. So just do it gradually. Whereas if you start, like, let's say, instead of that massive drop off in size, it looks a little bit more like this, where you go and then you step it down day in, day out, week in, week out, like this. Yeah, it's going to take a little bit longer, but also the average is probably going to come down more sharply with it. So there's less of a gap between your size and your average VAR. I hope that makes sense. I apologize for the awful drawings and the awful charts. But I think it's super important that you know that, and you just take it gradual if you do want to make that change. But yeah, that's all I have from a market overview perspective today. It's funny because I don't really stay too up to date with the market anymore. I track crypto, I track metals, and I track indices because I have exposure. And I like to kind of know where we're at with things, what volatility is like for my portfolio. But I don't track markets specifically anymore. Like, I'm not always looking at the news or the news headlines. Peach Hemingway, which assets are you trading? I will show you, my friend. Again, looking at Jiu-Jitsu kimonos. Assets and timeframes. I could just tell you off. So I trade mainly dollar yen, gold, and this is redundant because I don't trade WS30 anymore, and NASDAQ. I also trade S&P and the DAX. Some silver as well, although I probably won't be trading silver for a long time, because I mainly trade breakouts on silver. So my breakout levels currently, I don't know if yours are the same, Blaine, my breakout levels are currently there. So we could potentially trade in here for the next couple of years like this, and I wouldn't get tagged into a silver trade. Let's hope that doesn't happen, but that, you know, there's every chance that it could. I also trade dollar, euro yen, pound dollar, euro CAD, pound yen, dollar CAD, New Zealand dollar. I did trade crude 7 times. I got a decent return from it, but I don't trade crude anymore. I can't even remember what that system was, Blaine. I can't remember what I was trading on crude. Probably a breakout strategy.
I can tell you.
And it's a big day for me. It's a big day for me because I've officially surpassed $1 million in investor capital on Darwinex. So I'm going out for a meal in a bit to celebrate, because that is, for me personally, that's a massive achievement, purely because you guys have seen this from day one. I've live streamed for a couple of years now on Darwinex. You guys have seen me start XAQP, go through the early stages of learning to the point where I am at now. And it's kind of really nice validation. And I know Blayn will agree with me on this, purely because Blayn also, I think Blayn is almost at $2 million in investor capital, and has a 2-year-long track record. And it's really nice talking to you guys on these streams and knowing that you trust us and respect us for what we've done and what we've achieved. So I'm super grateful for this. And I just want to thank you, every single person who comes to these streams. I want to thank you for your continued support for Darwinex and for me. It you know, means a hell of a lot. So yeah, I appreciate all the kind comments. How do you see oil for sales around 69? I'll be completely honest. I don't care, in the nicest way possible. I try to stay as agnostic as possible these days, because I find that it's much easier for me as a multi-strat portfolio provider to remain agnostic. It's easier for me to apply strategies and flip buys that way rather than holding on to an idea. If I was to look, like, I mean, again, all depends on the tensions in with the US and Iran. I think but yeah, I would never want to be short oil, really. But yeah, Blayn, welcome, dude. I'm gonna hand over to you here, because otherwise I'm just gonna start talking rubbish about oil, and I'm not an expert in oil. I only made 1.45% trading it, so I'm gonna hand over to you for the remainder of today's session. I will remove my screen and
sharing my screen. Let's see, can I get it? There we go. Right. Present. Cool. Okay. Cool. Right. Okay. So for those, let me just zoom in on this actually, just so then it can be seen. So for those that have been joining us from the streams from last week and yesterday, you'll see that we built a system from a YouTube channel just to show you how to build certain systems and to actually test them live. And we found that that system worked well on gold, which is what was advertised on YouTube. But then we tested it again yesterday on different assets and didn't really get anything that worked very well or worked past the sort of criteria that I would say is tradable. So what we did say is we're going to strip it back and we're going to test the actual entry rather than the whole system together. Because for me, the most important part is finding that the entry has the edge and not the filters that are being added to the entry. So we're purely going to be testing the entry. The entry was a bar breakout level. Now, that just means that when we surpass, for instance, it was 30 bars. If we pass the high at the past 30 bars, we buy. If we pass the low of the past 30 bars, we sell. So what we're going to do is we're just going to test that today and see, is there an edge in the underlying entry model? So then we can take it back to, then we can add more things to it. So again, this can be very specific to each market because some markets move a lot more than others. And some markets, like for instance, gold right now is moving a lot more than anything else that I know of that I trade. There's probably other things out there that are moving a lot faster than gold and silver at the moment, but what I'm meaning is just from like the major sort of things that we normally trade as traders. So we're going to test it on dollar yen first because we already know that the edge is going to be quite strong on gold because even with the filter, it gave us really good results overall. Not staggering results, but good results. So what I've done is I've literally just built the pending order system, and it's as simple as this. You can use the free version of FX Dreamer, and it's just once a day at 1:05, which is just 5 minutes after the market opens. We'll place a pending order at the high of the past X amount of bars. So we're going to test, we're going to optimize and have a look at where the best area look back of bars is. We're going to risk 1% per trade. We're going to have the average true range as our stop loss. And we're going to check different multipliers. And for now, we've got take profit. We're just going to test it 1-to-1. So we're just going to see, is there an edge on a 1-to-1 basis that we can trade it? Not if the results are really good on a 1-to-1 basis, it's possible that we could trade it. But for me, mostly I normally go for bigger targets and try and trail the stop. So yeah, it's as simple as that for this. Right now, I'm just running optimization on dollar yen. So we're going to test the past, what's that, 7-8 years, something like that. And what I've done is I've done an optimization of bars and M. So M's just multiplier of the 1 hour stop loss. So we're going to look at 20 bars and every step is going to be 20 bars. So we're going to look at 20, 40, 60, 80, 100, 120, 140, 160, 180, and 200. So we're going to see, is there like an area where it kind of stables off, or is everything going to be the same, say roughly? And we're going to check the multipliers to see if there is a good area that we could test on there. So one thing that I would say is, especially when we're trading currency markets, sometimes, if we keep breaking the high every day, it's never always the best breakouts. Normally you'll see a fake out and then it will continue in the direction. But that's a filler that we could maybe apply later down the line. We're just going to test the actual raw edge at the moment. And it's going to take a while because we're running 50 tests here and I'm already 20 in. So we'll just have a look at the sort of results as of right now, and then I might have a quick look at the market, just give you some insight into, what Kieran's going on about the S&P 500 is a system that I've been trying to build on it for my investing strategy, or part of the investing strategy is quite different and unique, and so far it's been not too bad in the past 2 years. It's very simple, so it's nothing crazy. And again, do your own research, do what you want with it. But it's just a little insight into what I'm looking at. So what we can see is, so far, every sort of multiple is profitable, which is, for me, this is a first good start and a first tick to what I want to see. I want to see that, if we see this sort of thing, it's very rare to see everything working. Every different bar breakout, every different multiplier. It's quite rare to see this working, but it means that there's a massive edge in the entry model on this sort of asset, which is trusted dollar-yen. Again, results are not crazy. 35% with a 6% drawdown.
Trusted dollar-yen.
Trusted dollar-yen. So yeah, it's nothing to write home about. We've not got too many trades, but then again, we are feeling taking a breakouts to 120, 140 here. So what's good is we can see at the 3 multiple, anything between 100 and 180 is pretty much like for like. We're seeing, so that's what, 26%, 30, 30, 30, 30. So anything within, I would say, the 100 to the 160, anything within that range is going to be very similar results, So anywhere like the 120, 140, 160. So let's choose, where do we see tail off, 140 or 80? We'd need to wait to see 80. But I would probably choose 140. And what I'm going to do is, we're going to stop the test anyway, because there's no point seeing anything more. We could get better results and find a better level, but just for the sake of this video, because I don't want to waste anyone's time just sitting here watching it, we'll choose that level. So what we're going to see is we're going to have a 3 multiple, and it's going to be about the 140, 120. So let's just choose something in the middle, 130, for example. So bar 130, and we choose a 3 multiplier. Now we can check to see what is the best stop loss, and we'll do that in multiples of 100, 500, and then we'll have a look what's actually going to be good on this. So this is just purely optimization for the actual underlying entry. What we're trying to do, again, as I said, is we're trying to find areas of where we see stability. Because these are the areas that, when we see slight differences in the market, hopefully we see very similar results going forward. It doesn't always work like that, but for the most part, that's the way that I design all the systems, and so far I've had some decent success with it so far. So we'll run that test right now in the background. So that's the system. Okay, I think it's froze. Have I froze? Can you hear me? Oh, there we go. I think it was because we're on optimization.
Sorry, I was muted. I could hear.
All right, okay. I wasn't too sure if it just because my computer froze there. Let's actually take this. So, Kieran, here's something that's quite interesting to look at. When I was looking at investing, back in the day, and tried to gauge when's good to kind of sell, when a market's going to be bullish or bearish, and literally what you use is the quarterly month rotation. So this is quite interesting from an investing standpoint. And basically, what we're saying, the idea is when we break the low of the past 3 months, we tend to see a push down and a sell. Then what you do is you cut half your position, and then you sort of grid it back in. So literally, you dollar cost average on the way down. So what it does do is it is interesting because it can.
You mean martingale?
It's not Mark. Hey, it's not martingale if we're investing in the S&P, is it?
I don't know. Is it?
I don't know. At least it's got long bias. It's not. What I mean is that it's unleveraged though. So it's not going to be like Martingale. That's not even a word. It's not going to be like true martingale, but it's something that I've been playing around with and utilize sometimes when it comes to investing. Sometimes it works, sometimes it doesn't. But literally, if I can measure out the areas at which these occur in the past couple of years, it's not perfect, but it does mean that you're not in a bear market. So just based on the past couple of years. So we've got it there, unfortunately it pushes higher. We've got it there, pushes higher. We've got it there, drops lower. Yeah, so basically the theory is, I don't have this for the whole portfolio, but this is just for part of my portfolio position, just for preserving some of the investments that I have. Literally, I'll sell out some of the positions based on the S&P and things like this. So if we break the low of the past 3 months, I sell, and then what I do is then the rotation is that after that, you then set orders every month for the S&P to buy, and then you scale back in over the next, say, year. So every quarter kind of gets me back in 25%, 25%, 25%. And then again, if we then reach it, so for example, like here, would have sold half, then at the end of this quarter, 25%, 25%, and then I would have sold again here. So we're averaging in on the way up, and then we're really cutting it short on the way down. Again, every quarter it's averaging in. So you are going to catch drawdowns, but again, you keep buying at lower prices every time. And then when, so this is a really good method of how I dollar cost average into certain like stocks or things like this, because you'll find markets that it kind of works on as well. So again, we've dollar cost back in here. We've got pushed up back to the top. Again, we've seen the break. So we would have sold here, got back in again here, and would have sold again half the position here, which would leave us only 25% exposure. And then we're not in the downside. So then we're getting back in at different levels. Again, this is just all down to personal preference. But again, you can sort of dollar cost average back in the way down. And it just means rather than holding from here, going all the way down, you've cut a position, then you're getting back in. And then again, you're holding again for the foreseeable. So what it means that you're not actually selling your whole position at these exit prices. You're only selling a portion of your position. Then every 3-month rotation, you're then buying back in. Because this is what I found. Like if you look back on history of average drawdown of the S&P, we tend to see that the drawdowns are getting smaller. And the reason that we're getting this back up is because, for everyone that doesn't know, in the UK, most pensions are being invested in the stock market. I'm guessing it's the same around the world, meaning that we're getting more pressure of buying the S&P than we are selling. So that's why you're seeing a lot more V-shaped recovery in these sort of cases. Based on research, not actual facts, because I can't say that that's true or false, based on research that I've done and things like that. So this is the sort of thing that I would do when I tackle like invest in the stock market for myself. And again, it does not mean that it's going to be a representation of the future, but it's just something that I always like to do a little bit of analysis on the stock market and stock trading, not trading, but investing, just because it's good to have both going. But yeah, that was just a little filler until we get some sort of return on here. So let's have a look, see if we've got anything. Right. Okay. So testing's done. And what we can see is the area that we're getting the most out of sort of the return is the 300. So 1 to 3. But we can see a massive tail off when we go to the 1 to 4. So I would be more inclined, we can see that the difference between 3 and 200 is only $3,000. Drawdown is about 2% difference. Whereas, we could push for the optimal level, but let's say price doesn't push as far as what it has been over the past 8 years. We want to be slightly lower than that. So then let's say that the edge is eroding. Then it means that we're not getting chopped up too quickly. Again, we measure these things year on year to make sure that we're going with the overall market consensus as such. So I would then probably test 250 here. And then from there, that's when we've got our base that we can then start applying potentially some filters to it. Downside to a system like this is we really do not have a lot of trades. So we don't want to really get into the over optimization of sort of applying time filters or day filters. We would be looking at, because it's a bar breakout highs, we'll either be looking at volatility filters or a trend filter as such. So we're not getting too over optimized. So I'm just going to run this just to make sure that we're actually getting the results that it says. And then I'm going to have a quick look at the chart to see how are the losses occurring and see if we can find something to maybe filter out the losses, essentially. So that's something that's quite good to do. Like, we can always look on the MetaTrader chart. We can always watch it trade by trade as well. Like, if people don't realize, there is a visual mode in MetaTrader that we can watch the trades being taken at tick by tick or day by day, whatever we want to kind of view it at, which is a good exercise in itself, because you could constantly keep going back and forth to MetaTrader, applying this filter, applying that filter, applying this filter, whereas you could visually see something that's definitely going to aid the system by looking at the charts as well. So it's very worthwhile doing both exercises. Sometimes it's obvious, sometimes it's not. So it's going to vary from system to system. Just wait until this test is over. What sort of result were we expecting? Did I put 250 or 300? I put 300. My bad. Sorry, I need to run this again. So we want to see something within this area, or roughly the same. So then we can work with it. But how many trades did we get? Yeah, we're only going to get about probably 104 trades or something like that. So again, it's not a lot, but again, we're playing on the daily time frame. So daily time frame strategies, you'll tend to see a little bit less trades depending on the system and depends how frequent it is. There's some systems on the daily that I've got to trade almost every day. There's some systems that will trade a couple of times a month. So it all depends on the system. The systems that trade less, I tend to apply less to them, or less optimization, just because we're playing with little or limited data to make meaningful sort of situational bias in terms of applying filters. So yeah, we'll just let this run, and then we'll have a look at the chart, see if I can notice anything that might aid this sort of strategy. If not, then we might just have to default to testing a few things. So again, expecting about 40% return with an 8% drawdown, so nothing spectacular.
What the charity is?
Pardon?
Do you know what the charity Darwin ticker is? I've got it. QWMK, Rob. This has got to be my internet, bro. I'm freezing all over the place.
It's got to be. Anytime that I speak and waiting for a reply, it's like so delayed. Okay, quite interesting. So we've actually got a better return, 47% with a 10% drawdown. So again, nothing crazy. Profit factor is pretty decent at 1.62. Recovery factor is good. Chart ratio is good. So everything's kind of positive in terms of the metrics. The win rate's maybe a little bit low on the short side. But profit will trade 40%. Okay. So we're going to have a quick look to see, is there anything that's obvious? So we're starting it here, 2018, so we're in a downtrend a bit, but we're still not taking any longs. But the sort of like bar breakout, with it being 130 bars, it kind of has a self-built-in sort of trend filter anyway, because we're only taking the bar breakouts high or low for the past 130 bars. So I don't think a sort of moving average is going to change anything to the system. So for me so far, you can kind of rule out me applying a moving average. So we can see that we've got the movement here. Decent, decent, decent. So yeah, for example, what might be an idea, rather than applying a sort of, like if we start seeing loads of trades like this, for example, like we've pushed up, we've sort of decelerated and went down. This is maybe something that we're maybe going to look at, maybe applying a trailing stop loss, because it makes logical. As long as there's other trades that can back up this sort of idea, then we'll apply it. Again, nothing there. So we can see that we've had a good push there. Again, we were in this trade here. We pushed up. This probably isn't, it's probably not zoomed in enough actually for people to see this. Let me try and pull this down a bit and zoom in. Hopefully that's a bit clearer. Right. Yeah, again, like, so we can see we got in here, quite a good trade. Here again, so we got the direction right initially. We just couldn't get anything like, so again, we're like, there's no trailing or anything to this at the moment. So yeah, we might see if we can be able to sort of like lock in profit at the end of a day, and then see if we continue running the position the rest of the time, because that could be quite an interesting one. So again, there's no right or wrong way about it. There's so many things that we can apply to potentially like alter the sort of result, improve the result, but as long as it's kind of apply and work for a majority, and it's not we're overfitting. So again, we can see with this trade, we got the direction right again. It's just faded out. So again, maybe we can have a look at maybe closing half the position after 24 hours and then the other after X amount of time. So we can see all the winners, 1, 2, 3 days, and we could really actually create like a sort of time-based exit. Again, 1, 2, 3 days. Again, we can see that it took 3 days for that winner. And if we keep seeing that sort of pattern, then it means that we might only want to. 2 seconds, Kieran's giving me a phone. Hello.
Yeah. Are you still on the live?
Yeah, you're on the call on the live. well, yeah, because I've answered the phone on the stream.
Oh no. Some reason it booted me out. Let me try and get back in.
No worries. I'll continue. Kieran's been kicked out, so he might join back in a minute or two. If not, then you've got me for the rest of the session anyway, which was going to happen. So yeah, back to it. We can see 1, 2, 3 days, and if we keep seeing a repeat of this, then it's maybe something that we can then apply. Oh, he's back. So we didn't get any direction right. We got a little bit here, but nothing crazy. Again, tried to take the breakout here, small loss, so nothing good here. 1, 2, 3, okay. Again, 1, 2, direction right. So, from what I'm seeing is we're getting the direction right most of the time. So maybe we could apply a sort of time-based exit, or we can then split the position in two, to one closing at the end of the day or 24 hours from it. Because again, if you look at this position, this to me seems a bit crazy. You've spent almost 48 hours of profit and you've just gave it all back. So yeah, I think we're going to apply that. It might reduce the total return, but it could decrease the drawdown significantly. So we'll maybe give that a try, because again, here, direction right, loss. Again, the shorts are not doing too good here. Whereabouts is that we're taking the shorts though? So yeah, we're clearly taking shorts when it's in a downtrend. So that's fine. That's fine. Again, let's continue to look at longs. 1, 2, 3. 1, 2, 3. So yeah, not right direction, not right direction. 1, 2, 3. Again, we've went in the right direction and then we've lost the trade. So for me, that it makes it quite clear so far. Again, right direction, lost the trade. So yeah, we're gonna test a few things, but this will be based on. This is more about management of the time of trade rather than actual overall like trailing management or a filter as such. So this could be quite interesting, slightly different from anything that we've shared in the stream so far. But we're going to give it a go and see if this actually helps. 1, 2, 3, 1, 2, 3, right. Yeah, yep. Yeah, okay. Cool. Okay. So, actually, I've never done this for a pending order system, like a time-based one. So this could be quite interesting. See if we can get it. I think I'm going to move it to the instant execution. So this is going to be the exact same system, except it's instant execution, because this way I can make time delays. So what I'm going to do for the first position, so we're going to split the risk into 0.5, and we're going to do an expiry specific time. We're going to do 24 hours. Again, for the cells, 0.5. $24 hours. Okay. Again, I'm going to run this with this, except we're going to do 40 hours. So we're going to be splitting the position in two. I do this with a couple of systems. And the whole reason is that we're not just getting out all at the exact same time. It means that we're varying our. Did I put 40 hours instead of 72? I did. Sorry, 72 hours. And literally what we're trying to do is just spread the risk and take it around different sort of metrics. Oh, wrong one. Let's see if we can get it. Darwinex, bar breakout, V2. Okay, cool. So what did we say it was again? We said it was a 3 multiplier, 250, and the bar was about 130. Okay. Test on there. We'll run this test and we will see. Actually, let's run it on the visual mode. Might be slightly different results from instant execution to pending order because there is that 5-minute period where the pending order will not be live, but it shouldn't be too massive. Hopefully, this doesn't take too long. So all I'm going to do is just want to see that it's actually going to do what we've programmed it to do. So it could take a little while. Let me check that it's not got. Yeah, okay, it's all good. No, not what I wanted. Okay, let's just pause it there. Yeah, okay. So what we can see here is it's clear that we've got out the position here within the 48 hours, which is fine. and then we've got it again here at a different point, but then we've still taken this trade. Okay, so we've hit take profit, then we've closed above there. So what I want to do is in fact change this to this so that we're not taking a position after we've closed. So bear with me again. This is why it's kind of like, if you sometimes get like bad results and you don't know why it's taking like potentially extra trades when you don't want it to, always refer back to watching it in the visual mode, because that's where you'll learn what your system's actually doing. Because for sometimes you might think that you're actually programming it to what you think it's doing, and it's doing the complete opposite, or it's doing something that you don't like. So it's very important to kind of make sure that you are checking these things in the live execution model, just so then it's not doing what you don't want it to do. Because essentially, like, those trades were costly, pointless at the same time. So yeah, there's quite a lot that goes on with these sort of things that do that. Like, even I've been prone to it in the past where I've built a system, it's looked good, and to be honest, it's took probably about loads of extra trades that isn't needed. It's just giving back to the market. So let's see what sort of result we get. I'm just going to want to see it again. We'll slow it down because I know it will be coming up. And I want to make sure that it's doing what it is. And then we can just run the test and see what we get. And then maybe this is a viable system that then we can apply to the charity Darwin. Slightly different from what we've went over the past couple of weeks, obviously, because, okay, it still took those trades. Interesting. So, got it. I forget that I've group numbered them. But even I can make mistakes sometimes. This is why you always go back and test to make sure that it's 100% correct. So I forgot that I already applied group numbers because I was testing management, because in management you can have different levels of management and attach different group numbers. So you can have this position as group number 1 with this management, and this position as group number 2 with a different management. So that's quite advanced. It's very simple, but it is a little bit more advanced. So then that means that the no position thing here is applying to no group, meaning that it's bypassed. So I just need to get rid of this. Third time lucky, fourth system, third time lucky. Should do what we want it to do. You know, one thing that is quite interesting to test, like, time-based stops for like some systems, because sometimes the edge is only available for X amount of time. So what I mean by that is, like, some of my strategies might just trade intraday because we've seen volatility go up today. Doesn't mean that we're going to get it tomorrow. It can sometimes continue, especially in certain assets. But on FX, you know, we know that FX can be quite mean reverting or a little bit choppier. So for some of my strategies in FX, it will trade and just close within the intraday, unless it's like a sort of bigger like swing, which doesn't really happen too often. But yeah, I like to keep my trades just within the day for the most part. I do have some strategies, like, for instance, I've had a dollar yen position, dollar yen and pound yen position open from yesterday into today, and if the momentum keeps going, it'll hold into tomorrow. But it's very similar. Like, it's very different from every other strategy that I have. How do I get started? Started with what? Trading or algo trading in general? Just kind of watch some of the streams, and you'll learn from there. Sorry, I need to get this back over. So sorry, just to kind of go over that here. Again, we were taking that trade here and it was losing. Now, because I've got rid of the group trading, it's now just taking the wins and not taking unnecessary losses there. So that's good. Again, don't know why it's getting out of two positions at the same time there. Because that's 24 hours, that's 48, 72. Okay, I think I know why. Yeah, okay. So this is where there is a flaw. It times it even over the weekend. So this is something that I'll need to have a look at. I've never done like a time based for this amount of time in terms of a trade. So this was Friday, and then it's closed on the Monday because it's been 24 hours for that system as well at 72. So I'll need to find a sort of way to sort of make like a variable so that it's not actually looping over and doing that. Anyway, we'll continue and we'll see if we can get more trades. And then hopefully it gives you an example of exactly what we're doing. Again, that might have been a Friday. Yeah. So you can see the top right, 23rd to 26th. So yeah. Although that might be an extra edge in itself because as much as the week might have finished bearish, Monday could revert as well. So it could that could be a hidden like edge in itself for this system, or it could massively improve it. It might not. We'll have a look anyway. So I'm probably just going to stop this right now, and we'll let it run in quick time rather than slow, just so then we can get results a little bit quicker. And what we're hoping for is a lower drawdown, somewhat similar return. Sometimes your management will increase your return significantly. Sometimes it will be like for like, but I'm more interested in the return to drawdown because whenever I like add it to a portfolio and I can like de-risk it to like 0.05% per risk, as long as the return to drawdown is reasonably high, I'm normally quite happy. What we don't want to see is a return like a less return to drawdown because then that means that the management is making the system worse. So we want to see a better return to drawdown in order to make the management make sense. Sometimes like, you'll get some of these weird systems that add in any sort of management. Like you can think of any sort of management, and it really doesn't help the system. Sometimes, like it is what it is. That's why I like having a lot of low risk systems because sometimes the edge is just purely in the entry and the length of time that's in. Like from a day trading perspective, it might be you get in at the start of the day and exit at the end of the day with no management. Some people might say that's a bit crazy, but if the return to drawdown is really good and the win rate's quite high, I'm quite happy with that. When I say high win rate, if you're leaving something to like a 1 to 5 and it's closing at the end of the day, it's not going to always get the 1 to 5, but again, the win rate could be something like 40 or 50% because you're holding for the duration of the day. Okay. So let's see if we can get a good sort of return. So I think with a 47% return with about a 10% drawdown, if I'm correct. So, if we get similar returns with less drawdown, then that'll be pretty solid. Although it's not looking likely. It'd be interesting to see if it takes the same amount of trades as well. Okay. Let's see if we get anything more. Obviously, it'll say it'll take double the trades because we've split the risk and put it into 2 positions. But again, I'll just be halving it to see if it's going to be the same for same. Okay. So it's actually not done anything really too. So it's cut the returns by 5%. And it's reduced the drawdown a little bit, but the win rates went massively up. So maybe that sort of structure is not the best for the strategy. And again, this is just things that we test. I wasn't too sure if this was going to work 100% or not, but maybe the edge is just somewhere different. So let's kind of test that we leave this position open. And then we still have that one that closes. So essentially, we're cutting half the position after a day. And then we'll see how the rest of it happens. If this wants to take. So come across. Nope. So quick look. No specific day. Good. So how many trades it take? 254. So even split by half is 124. Okay. So yeah, maybe because it's cut up the trade that was 3 days to the 1 day essentially. It's then took another trade at the start of the week, so it's taking more trades. So again, this is just a little bit of tinkering that we just would have to do. But yeah, we'll work around it for now. We'll see if leaving half the position open and cutting half 24 hours later, if that helps. I would presume it will get less return. But it might. Just trying to have a look here. Cut. Yeah, so for instance, like this position here. Nah, maybe not. Maybe not. Yeah, maybe. Do we get it right? So 253, 130. Yeah, cool. Okay. Let's see how we get on with this one. Again, unfortunately, research and development is a constant feedback loop. I'm just trying to do it in front of you in real time, rather than what I could do is I could prep for these sections, right? Make a system, do all the testing, and then make it seem so simple that then you would get false reality of what the process is like. Unfortunately, that's kind of how most people will probably show it online for the most part. Some systems can be made and the management can be very simple and quick. Other times, there's a lot of research and development that can go into each system. If it was that easy, then everyone would be successful as such, or every system would be great. But sometimes it just takes a while and a little bit of thinking, research, trying different methods in terms of time management, filters, trailing management. It can take up a lot more extra time. So yeah, I'm just trying to build this here in front of you, real time, no sort of plan as such, just to kind of show you what it's really like. So far might be better. We'll see. because then what this is doing is this is kind of mix and swing with like intraday trading. So we're only trading for 24 hours or within 24 hours, as well as holding a position potentially for more than a day. So this could capture kind of both sides to it, which is a good mixture. But we'll see what the results are like. Already the drawdown looks a lot healthier to me. But we'll see. We'll see. Okay. Yeah. Okay. So this is actually a fairly good result, and already this system is not too bad. So 47% return with a 5.79% drawdown, which is pretty good for the most part. Not every system needs to take heaps of trades. Not every system needs to return 500% with a 10% drawdown or whatever the statistics you'll see. The good thing is, like, you can build, let's say you get 10 of these sort of strategies, and put them in a portfolio. The average drawdown will probably, like, as long as they're uncorrelated, will drop. And the returns obviously increase naturally. But that's the whole point of portfolio construction. But what this is showing is this is pretty good. A 1.78 profit factor is very tradable. Sharp ratio 2.7, which is really good. Expected payoff is high. So even risking 1% to have less than, obviously, equity drawdown's a little bit bigger than the relative. But that's okay. It's expected. So it's, for me, this is not bad. This is something that could be tradable as part of a portfolio. And this system, I will be de-risking, and it'll probably be going on the charity Darwin. There's maybe a few more things that I'll have a look at. Again, we can see every day is profitable, which is a really good start. You might see some singular months, but then again, removing months on something that's got not enough trades or days is just not something that I would do unless it's painfully obvious. So, like, let's say, Asia session just is, there's not a profitable trade. Then you could maybe say that, all right, okay, maybe it's not the best to trade it around the Asia session. But again, this is all statistics that we could dive deeper into later on. But yeah, so far so good. So we know for dollar yen that we potentially got a decent system. And that was just very simply me visualizing what I think would help the system. There was nothing, we didn't kind of overfit it. We knew that potentially, I would like to think, again, see this position here. If we had like 3 or 4 days, then it would work. So maybe we'd try like a 5-day to include weekends or something like that. Or, we could manually test this as well. I would need to figure out how the go around is around the weekend, to not include weekends for times. But yeah, that's something I'll have a look at, and then maybe when I figure it out, then we can apply it to the system and we can see if it improves. And again, we do have a strategy and development section now within the Discord that I will drop the analysis to this in that, so then you can see what sort of returns it's getting, how it looks. So at the end of the week, I'm going to probably put all the strategies that are in the charity Darwin together and see how does the portfolio look right now, and how is it performing against what's expected. So, yes, it might be down right now, but what I want to see, is it within the drawdown of the portfolio, and is the stagnation period not extended from the portfolio? So it might be down right now, but probably had it going up 2 weeks. So it is what it is. I do expect that we will get a return on it by just building the way that we have been in these robust manners. But yeah, we'll see. So yeah, dollar yen, got one working on the stream. And simply what we've done was strip back the strategy from the past week, go back to basics, look at just the entry, see if there's an edge in the entry, and then traded it and add in like a time based. What would be quite cool is if we apply this to gold now, if we then see similar results in that are good, because then that means that we built a system that without any optimization might work in another market, which is always good as well. But what I will say is not every system needs to work on every single market. You might have a strategy that only works on one market. That's totally fine. As long as everything is robust and it meets your checklist, then that's totally fine. There's some strategies that I have only pair specific or sort of like asset specific. So you will get them. Don't be afraid of them. If the edge is there and it's robust and it's good, you trade it. Or that's what I do anyway. So we'll test this in gold, see if we get a positive result in gold. And then 5:20, we'll probably call it a day after that, and I'll upload files into the Discord over the coming days, weeks, months, and we can see where we can get with that. So why is this taking? It's taking a bit longer time to test, but we kind of know that this will be. I would like to presume that this will be profitable overall, but again, we don't know until we test them. So again, it's looking pretty flat around 2019, 2018. Which is fine. You might have some strategies that when you're looking at a higher time frame, when it's trading, it could be flat for certain periods of time. That's just natural. Some markets don't move as much as others, and some markets just have crazy years and flat years. That's the whole point of building a portfolio. You know, you've got systems that might have a negative year. It doesn't mean that they're a bad system. You tend to find that with robust systems, they might have a negative year and then have 5 great years. But it doesn't mean that the system's broken. You know, the whole point about it is building a bunch of systems in a portfolio that counteract and are uncorrelated to each other and altogether work very well. So again, so far nothing crazy result-wise. That looks like it's going to be about 6 or 8% drawdown at the moment. It's taking its time to test though. I think if I was to get, was it this one that we done? Yeah. This was the strategy that we built. This was the other strategy that we built the other week. So again, exact same system that with an ADX value. We done a 30 bar breakout. Anything below the 40 ADX, 1 to 4 take profit, 2.25 multiplier, and we had a trailing stop. So every 8 hours, so every 2 4-hour bars, we then trailed it. So again, not a bad system overall. 67% return, 1.63% profit factor, 5.84% drawdown, but relative was 7.17. Again, win rate quite high, 51.35%. For a system that goes from 1 to 4s, you know, having a high win rate comes from the trailing. So it's not we're hitting 1 to 4 51% of the time. If you ever get a system like that, please give me a message. So this one is definitely going to underperform the system that we built last week on gold. But trading them both together, like the gold one as well as the dollar yen one, I might just quickly retest the dollar yen and then we can put the gold and the dollar yen system together. Let me just check that. Get rid of that. So yeah, it's looking profitable. It's not bad, but I'm just going to quickly go test the dollar yen so we can put both strategies together in quant. And we'll do a little deep dive into that, and then we'll call the session an end there. Right, let's have a quick look. Total returns. So we could check long and short. Long 48, short 18. So nothing great, but nothing too bad. Again, so for me, this is actually not too bad. So the average yearly return is higher than the drawdown, which is always a good sign. Any system that you get like that is always a good sign. Obviously, this is the gold one. I do not believe the dollar yen one will be like that, but we'll see how they do together in the portfolio. Have a look at trade analysis. So again, we can see Wednesday's underperforming, but we really do not have enough data. Only 191 trades. But what's quite clear is Friday longs is very strong. Friday short's good there. So, but Tuesday seems to be the best day for the strategy so far over the past 1, 2, 3, 4, 5, 6, 7, 8 years. But I'm not going to hold weight on it when you're getting an average of 20 trades a year. So for me, that's not what I'll be looking at. Maybe if I had 100 trades a year, then I could basically say, okay, Wednesdays is maybe not worth trading, Thursdays maybe not worth trading. But as it stands right now, it's not a change I'm going to make. Again, what's quite interesting is we can see that short side's looking horrible. But again, around that sort of end of London, start of New York is where we're finding most of the returns so far, which for the most part can make sense because obviously the volatility is probably highest at that New York London crossover for the most part. So you can always potentially just say, I only trade this session. And that would be totally fine. It would be valid. But we'll just wait for this test to run. We'll put both of the strategies together, and hopefully we get that max drawdown that lower. Or if it stays the same, we're still getting a really good sort of return to drawdown overall. That even probably with these two systems, we might just beat the S&P, maybe. We can have a look. But that's the beauty of it. Like, that's two systems over the past week that we've built here potentially that are profitable. That if you put them together, based on historics, obviously past performance does not indicate anything in the future, that would potentially beat the S&P with a much lower drawdown overall in terms of average returns per year. So that's why it's quite powerful to build a lot of these systems. UG. Darwinex stream. Okay. So we'll add this to it, and then we'll have a look. So again, profit factor is actually higher in this system than the gold one, but max drawdown is slightly lower, but the returns are not where it's good. So we'll put these two together, and then we'll kind of analyze it from there. Okay. So it has increased the drawdown slightly. But again, we've increased the returns significantly between the two systems. So we're making roughly 8.88% a year with a 7.46% drawdown. So nothing crazy. But again, at the same time, it's not the worst. Just imagine if, what we can do in essentially like 3 months' time from now is we could have 10 systems. We can show you them all together, and then you'll be able to see the power of what having a portfolio can do. The problem with that is we could then keep building we could keep building breakout strategies on gold, dollar, yen, or we could keep trading the same market, and then we could have a high correlation. So the idea is we're going to build something on something different, hopefully, next week. So I'm going to see if we can build something different on next week. Maybe we can continue this bar breakout on something else. What I will do is I'll have a look tomorrow and see if I can test something on pound dollar or NASDAQ or something like that. And we'll see if we can get a result from there. If not, then we might just have to build another strategy next week. It is what it is. If I do find something that's maybe decent, then we can again build on it next Tuesday potentially, and then see if we can apply any sort of management or anything like that, and then add it again to this. And then hopefully we'll see a return better than the S&P with a drawdown of around 5-6%, even while risking 1%. So, it could be quite interesting. But we look at long and short. Long is going to be predominant in this because it's trading a lot in gold. We can see the equity curve is a little bit more. If we put both together, we can see that it's interesting to see when you put two systems together, the portfolio looks a bit smoother than the individual equities. So if we just look at the portfolio alone, again, it's not too bad. Risk analysis. Trade analysis, sorry. Again, we can see that it's now profitable across all days. So this is something that's good. We want to build a portfolio that's profitable across all days. You will have some systems that are better in individual days. So like right now, we can see the system absolutely crushes it on a Friday. Does well on a Monday, worst day is a Thursday, which again, this can happen. We can also look at this, in the end, like if we build a portfolio all together, right, and we see that the end of after New York sort of coming to a close, we're seeing negatives, then it makes sense that we stop trading before the end of New York session. So if we see that on a portfolio basis, then it means that it's true, especially if we're trading loads of different assets. Basically confirms that the breakouts, or if you're in trades, you're seeing exhaustion at the end of the session, essentially. So, which is why it's good to have a mixture of breakout strategies as well as long-term swing trading strategies. But yeah, okay. So far, so good. So what we've done today is we have built a strategy that's profitable on dollar yen. We're combining it together with gold, and hopefully next week we'll try and get something working on something else. I'm just trying to think what would probably work with this strategy on it, but yeah, we'll try NASDAQ. I'll run a test. Might run a test just right now while I go and make my dinner. See if it works, and then if it does, then that's what we'll follow on with on Tuesday. If not, I'll just have to do a little bit more testing, and then we can go back to if nothing works on it. Then we'll go back to the drawing board and we'll find another strategy, whether that's from Ultimate Strategy, another person on YouTube, or if anyone has any suggestions that they want to see maybe built out within reason, then we could obviously drop what you want to see in the Discord, and then maybe we can build it here live in the stream, because that'd be quite cool to make it a bit interactive. But yeah, again, another thing that could be quite interactive is the people that are in the Discord as well. You've seen me just strip this system back today. Go and test it on anything that you want as well, and let me know what sort of results you get as well. Tell me what sort of markets that you've got it working on, and the sort of research and development that you've done on these strategies, because it's always good and to post these things within it, because then it's a good way of you sort of putting yourself out there, and you can always reflect on the results that you put out and work on them. But yeah, anyway, thank you for joining the stream today. That is me going to call it a close. Again, if anyone needs to message me, then just drop me a message on Discord or anything. I'll try my best to help out. But yeah, everyone enjoy their Wednesday. Is it Wednesday today? It is Wednesday. Wednesday evening, and we'll catch you next Tuesday. Okay.